Good morning. You're watching Business World Live. I'm Danny Laurel. It's the start of a new trading day. Let's kick off with our top story. Current quarantine measures will continue in Metro Manila and nearby provinces until mid-May. President Duterte announced in his public address last night that NCR, Cavite, Laguna, Rizal, and Bulacan, collectively known as NCR Plus Bubble, will be under modified ECQ until May 14th. Santiago City and Quirino in Region 2 and Abra will also be under MECQ for the whole month of May. President Duterte apologized to the public for extending the MECQ.
Mga kababayan ko, naghihingi lang ako sa inyo ng paumanhin. I'm sorry that I have to impose a longer itong modified enhanced community kasi kailangan nag-spike may spike ang tumaas yung infections at yung hospital natin puno.
The announcement of the quarantine classification comes just as the Asian Development Bank slashed its growth prospects for the Philippines to 4.5% this year. That's from 6.5%. ADB Country Director Kelly Bird says the country faces a fragile recovery due to uncertainties over this prolonged pandemic. Okay, guys, let's check in on the virus numbers via Bloomberg's tracking. You can see on my terminal here, worldwide cases, 0.837 million. So that's 837,000 new cases as of the last sprint, whereas here in the Philippines, it's 6,877. So a few days already below the 10,000 levels here in the country. Now, this from the WHO, new coronavirus cases globally rose, however, for the 9th consecutive week. So if you take a look at the total numbers, that's actually a record 5.7 million. The surge mainly, of course, occurring in India. That was a 52% surge in India. Their death toll over there surpassed 200,000 people now dead. Now, the moves, however, over in Europe are a different story. Travel is set to restart there. That's gathering pace. Britain is following France. They've got plans for a digital vaccine passport. Meanwhile, here, just a quick check on the number of vaccine doses. You can see in the Philippines quite, a staircase up to heaven, let's say. Vaccine doses at 1.810 million so far. And here, finally, there's also 500,000 more vaccines that have just arrived from Sinovac. Now, let's take a look at our open this morning. Recall that yesterday the index had bounced back on selective buying. It seems that, of course, now we've got this new news to be digesting. Our index down by 0.16% to 6,458. Now, according to Luis Limlingan yesterday, actually, he was saying that investors had already been pricing an MECQ, but a more flexible one. So we're going to be seeing whether this actually holds below the levels that we closed in yesterday. And this comes after foreign arrivals have plunged in the first quarter. This comes from DOF data reported by Philstar that was down by 98% in the first quarter. Of course, this as the government imposed a travel ban on foreigners. So those visitors from Jan to March were at 29,383. That's from, get this, 1.39 million tourists during the same period in 2020. Now, what is the DOT looking at? On an interview on the Chiefs and One News last Monday, Tourism Secretary Berna Romulo Puyat had said they're looking at how Thailand is going to be carrying out their plans to let vaccinated foreigners in Phuket by July 1. So they're watching that very closely. But I did want to take a look at one specific stock here, and that is, of course, SMIC. they have said that despite the pandemic, they're open to more acquisitions. This is according to their CEO. They said that wherever they can move with flexibility, with less restrictions, they will be proceeding with expansions in the pipeline. And they are looking to acquisitions in businesses in high growth sectors and industries related to existing businesses. SM, however, down by 1.01% to 980 pesos this morning. Now, it's a dread of local businesses, but the relief of healthcare workers, another 2-week extension of restrictions. Here to chat with us how these new developments will affect the markets, we have VP and Research Head of Security Bank Equities, Angelo Taninco. Good morning, Ange, and welcome back.
Good morning. Thank you, Danny.
And let's kick off with the global market outlook. We see when we look at the stocks, at least we look at the big markets, Wall Street, China, etc. It seems to be in euphoria, so to speak, if I can use that term. Can we say that this is the general direction globally, or is this only developed versus developing countries right now?
Well, at the start of the year, the global growth outlook has turned positive following a deep recession last year. And that overnight, the Federal Reserve has again mentioned about the monetary accommodation being sustained, keeping policy rates there at record low, and also having a more upbeat outlook on the US economy. And this is underpinned by the fact that the US has initiated a massive fiscal stimulus package alongside sustained monetary stimulus, together with the more progressive vaccine rollout. And this has built up confidence levels in the US, and which is basically spearheading global growth. Elsewhere, we also saw Europe now looking at a better coronavirus situation in terms of having a downward or a shift in their COVID pandemic curves. And that has led some of the economies there to reopen their businesses in light of the also the vaccine rollout. In Asia Pacific, we also saw most markets also on the positive year to date, and this is because again some of the markets have uh, have grown remarkably in terms of economic activity. At least looking at the more or highly frequent indicators like the PMI. If you look at China, for example, which has bounced back immediately from their pandemic early last year, and also India, which of course is now facing some headwinds in light of the recent surge. So the global picture is still positive, though recent months, because of the new coronavirus variants, have led to an emergence of this downside risk to the growth trajectory. But so far, we think that as long as the vaccine rollout continues and the stimulus packages are still being implemented, we think that the global economic picture is going to be more robust than last year.
Sir, where are the funds flowing in right now? Is there, still a risk aversion in that they're going to the safe bets? They're going to Wall Street, they're going to the dollar, they're going to gold, and even alternative investments like Bitcoin. Or are you seeing flows towards emerging markets? The Philippines, for example, has still felt the brunt of an exodus of net foreign funds.
Well, in the US, clearly the equity markets there have still continued their positive pace. Last year, it was pretty remarkable despite the onset of the pandemic, and this year they are reaching fresh highs. So that is again hinged on the economic stimulus and the vaccine rollout. Elsewhere, we also see foreign funds entering more into emerging markets. Like in the case of, for example, Vietnam, which is, I guess, the darling in Southeast Asia, and some frontier markets, also having upbeat market sentiment, investor confidence there. And that's partly because relatively they have been able to contain the coronavirus surge. Their curve, the pandemic curves have been going down or flattening, and that they have kept their numbers in terms of cases or infections relatively low. So that showcases the that the economies are really uh, ready in terms of fuller economic reopening that will, of course, instill more investor confidence in these respective markets.
Cases rising here, or is to the upside? What are seen some optimism?
Yeah, transport mobility, and which is heavily dependent on the stringency of the lockdown. So last year we saw transport mobility in the Philippines relatively low, and that's because we had a stringent lockdown. The start of the year, we continue with the GCQ, and but in terms of the mobility, say people mobility trends in public transport systems, it's still not as high compared to other countries. I think below 50% of pre-pandemic level. And that is, I think, one key criterion for investors in looking at whether, as a gauge or barometer for economic activity. There's of course a positive correlation between the mobility and the economic activity or economic growth. Another, of course, is the vaccine rollout. So we already initiated it. Relatively, we are, of course, not as fast compared, say, to the United States. And that's because, again, there's a global vaccine shortage. The distribution of vaccine globally is heavily skewed towards advanced economies. And it takes a while before we can have more of the supply share. But of course, the government's plan is that by the second half, there will be an acceleration in the vaccine rollout. And that can also be considered uh, by the investors more positively. And another, of course, is inflation. If we look at inflation differential between the Philippines vis-a-vis the other countries, they tend to have a relatively high inflation. And that's because, again, there's one output there, and that's meat inflation, which is the biggest contributor. And that is what the government is addressing. So it has already imposed certain emergency measures, executive orders that will increase the pork importation, reduce pork tariffs, so that the supply shortage will be addressed, and therefore inflation will come back to normal levels. So I think that's among the tailwinds at the start of the year. But in the second half, it appears that once these are resolved, then we can have a more optimistic and better economic picture.
Okay, so of course, still wait and see mode here. But as you mentioned, a lot of eyes waiting on the reopening of the transportation industry, and a lot of other things should be following there. Thank you so much for those insights. That was, of course, Angelo Taninco of Security Bank.
Thank you.
Here are the other headlines we're keeping our eyes on. Pagcor's net profit declined 80% year on year in the first quarter after casinos and other gaming operators continued to suffer disruptions due to the new wave of lockdowns. Gross income from gaming operators fell 54% for the period. Excluding gaming taxes and its contributions to the national government, net gaming revenue was down close to 50%, far outpacing the almost 14% slump in expenses for the first quarter. Pagcor chairperson and CEO Andrea Domingo attributes his performance to the continuing restrictions, with casinos and other gaming establishments forced to limit their operations or shut down entirely. Domingo earlier projected that profits from gaming operations could plummet to about 17 billion pesos this year, from a high of 80 billion pesos in 2019 and 30 billion pesos last year. That is, if the country's COVID caseload remains high and movement restrictions persist. Domingo says the agency is now trying to keep afloat. She also noted that if GCQ is declared in the next 2 weeks in the metro, Pagcor might be able to recoup some of their losses. But as we now know, the more stringent MECQ has been extended in the NCR Plus bubble for these 2 weeks. And this from the Philippine Star, the local electronics sector warns of the possible negative effects of the Create Law to electronics production in the Philippines. SAPI says some investors might pack up due to the surrender of tax perks mandated by Create. This in turn would force them to produce low-value products. SAPI President Dan Lachica explained that manufacturers would only maintain operations here for the time being, but they would eventually move out to other Southeast Asian countries upon giving up their incentives. Lachica adds that at the end of the transition period, several electronics companies would exit the country as firms would get stuck with obsolete products. This is why the group is asking the government to come up with measures to cut the cost of doing business in the Philippines in order to attract multinational companies. And that's a first look into the business day. Today's Thursday, April 29, 2021. Catch Business World Live for the market close at 3:15 p.m. today. I'm Danny Laurel. Mask on, wash hands, stay safe, Philippines. We are One News.